Okay. All right, and let's see if that changed. Oh, there we go. That's weird.
Is it working?
I see people, yeah, it's working. Yeah, like I see, whatever, 9, 10. Okay. And it goes in, and I don't show a name showing up. Okay.
Okay.
All right,
well,
so that's good.
That's great.
Okay, good. Oof. All right. Cooking with gas. All right. All right. Listen, thank you for everyone for dialing a little early. We thought we had some well, I shouldn't get too far ahead of myself. Thanks for dialing in here. Just going to wait another 3 folks an opportunity to get logged in here and get. Okay. So thank you for your patience, and we'll get going at around 4:31 or so. Okay. Thank you. Your audio isn't great. It's a little choppy and out of sync. All right. So how about now, Dawn? Any better now? Well, I guess the important part is that your audio is good. Testing. I'll just try to talk clearer. I thank you folks for dialing in tonight. We're just going to wait another 2 or 3 minutes to give folks an opportunity to zoom in here, and we'll get going with our call. Thank you for your patience. Thank you for your support of the STA. So Adrian, I think the final registrant count was around 220 something. Okay.
Great.
So I'll send you some numbers tomorrow. Yeah, I mean, for July, that's pretty good. And, obviously we've been getting a lot. We've been getting just as many replays as we've been getting on the live. So we'll see how it goes. Okay. All right, good evening, folks. We're just going to wait another minute, give people an opportunity to dial in here. Thank you for your patience, and thanks for dialing in on a July 8th evening. Hope everyone's having a good summer so far. And Dawn, if my sound gets really bad, shoot me a text, and I'll take my AirPods out and just go right to the phone. Okay. Okay. Thanks, everyone. We're going to wait another 30 seconds or so. Give people an opportunity to get settled in here. We do appreciate you dialing in tonight and your support of the STA. Okay. Okay, Adrian, I'm going to start going through. I'm going to start going 5, 4, 3, 5, 4, 3, 2. Okay, well, I'll start going through the updates. So, listen, good evening, everyone, and welcome to tonight's open call titled Round Lot Reform. Tonight's event is brought to you by the STA Foundation, a 501c3 corporation that serves as STA's educational arm. We just sent a reminder email at around 3 o'clock today that included a white paper and also some helpful links on the subject matter that we're going to be covering tonight. If you didn't receive that email, please reach out to us at STA sta@securitytraders.org. Again, that is sta@securitytraders.org. And we will get that material out to you as soon as possible. And then we'll also be sending you a link for a replay of tonight's call along with an executive summary of it. Now, before we introduce tonight's presenter, we do have two STA house items for your attention. We recently hosted SEC Commissioner Caroline Crenshaw on our podcast, Trading Views. It was an informative conversation on a couple of timely topics like ESG, gamification, and trading apps. If you haven't had a chance to give it a listen, you can obviously go onto the website and you can see it there, or you can find it on your favorite podcast or streaming platform. We're on all of them now, Spotify, Apple, and Google. Second, we will be opening registration for our October 6th to 7th, 8th Market Structure Conference on or around Monday, July 19th. We're very happy to report that this year's conference will be a hybrid event that includes people actually in a room with the content taking place on a stage, and then that content being live streamed out on a virtual basis. Based on some of the turnouts that have happened earlier this year with other STA in-person events, we are optimistic that people will be attending in October in DC. So please keep an eye out for the announcement and for more information becoming on our conference. So again, we're optimistic about how the event's going to be this October. Okay, so now on to tonight's call. I'm going to just read this because it's a little one of Congress's principal objectives for the national market system was to assure the availability of information with respect to quotations for and transactions in securities. NMS market data is made widely available to investors through the national market system, a system that was set forth in Section 11A of the 1975 amendments to the Securities Exchange Act, and then facilitated by the Commission in Reg NMS. Now, while the collection, consolidation, and dissemination of market data for NMS securities, which is performed through Securities Information Processors, or SIPs, has improved since the mid-1970s, the Commission has not significantly updated the rules that govern the content and dissemination of NMS market data since their initial implementation. This is even though technologies as well as business and trading practices have dramatically changed since then. Now, last year in 2020, the Commission took several steps to overhaul the SIPs. Their actions are broken down into three separate rulemaking procedures. There was a governance order that was issued in May of 2020, and that was later followed on with the infrastructure rule and then the fee change rule as well. Now, the infrastructure rule updates and significantly expands the content of NMS market data to better meet the diverse needs of investors in today's equity markets. And the rule seeks to update three areas. It's information about orders and share amounts smaller than the current round lot size, information about certain orders that are outside of an exchange's best bid or offer or depth of book, and then information about orders that are participating in opening, closing, and other auctions. Now, tonight we're going to be discussing one element of the infrastructure rule, which is the round lot reform. Now, for those familiar with rulemaking, the road from designing a new rule to its implementation is a long road and at times is rocky, and some would even say it's dangerous to be traveling on it. Having said that, though, there is a large segment of market participants who do favor round lot reform and believe that it should and can be implemented separately while matching the infrastructure rules requirements. With us tonight to discuss all this is Adrian Griffiths, Head of Market Structure for MEMX. For those who don't know Adrian, he joined MEMX in May of 2021. Adrian was previously Assistant General Counsel at Cboe Global Markets, where he served as primary counsel to the U.S. equities and market data businesses. And before that, he was Senior Associate General Counsel at NASDAQ. Welcome, Adrian.
Hi, Jim. Good to be here.
Good. Well, listen, I mean, that was okay, the opening, right? Were there any gaps? Were there any gaps that you feel I missed that you want to touch on, or you want to just kind of jump into the questions?
No, I think you mostly covered it from the infrastructure rule perspective. I mean, the only thing that we didn't talk about is competing consolidators, which would vastly changed the way that market data is actually disseminated to market participants. But in terms of content, I think you nailed it.
Okay, good. All right, good. All right, listen, first question. Listen, the complaints about the quality of the data provided by and the performance of the SIPs have existed for quite some time. But what is it about round lots that stands out, and what is the problem that the current round lot definition is causing?
Sure. So, a lot of the discussions that we're having in the industry about market structure today, really comes down to, how the rules and regulations that govern trading, account for differences in the way that different securities trade. So, round lot reform is really, one version of that. And so the issue here is high price securities don't trade as efficiently as they could under a regime where a round lot is virtually always 100 shares. There are about 12 securities that have a round lot size that's smaller than 100 shares, but everything is lumped into a 100 share round lot these days. And the exact number of high price securities, talking about securities priced above 250 per share, fluctuates on a daily basis, but there are about 200 or so securities that are in that bucket that we think trade inefficiently under the current regime. And I know 200 securities doesn't sound like much, but these securities, while they only make up about 3% of trades, they actually account for 8% of volume, and then really outsized 29% of notional traded. So it's 200 securities, but they really account for a huge portion of trading that takes place on a daily basis. But our market structure, like I said, is not really designed to trade these stocks efficiently. And the reason for that is 100 share round lot obviously translates into a very high notional required to set the MBBO in a high price security. So if you take a name like Amazon, Amazon closed yesterday at just over $3,600 per share. And at that price, a quote would have to be for $360,000 notional to set the MBBO, which is really a huge amount. And if you compare that to where other securities trade, it's really it's a very big difference. Something like Apple, you've got 14,000 notional to set the MBBO compared to 360. And so the basis point spreads in these names tend to be very, very significantly wider. And it's a really important problem. And I think it leads to two different things that we think deserve attention. So the first is kind of what we talk about a lot when we talk about the odd lot issue, which is it's a transparency problem, right? And so that's a function of wide quotes, and then also a corresponding increase in odd lot trading. So for these names, you're talking about 76% or so of trades that are done in odd lot quantities within these artificially wide spreads. And in some securities like Amazon, it's even higher, more like 95%. And so, as a practical matter, what that means is, if you're an investor that's taking the SIP feeds, you're not getting a fair representation of the market in these securities. And, this is something, Chair Gensler has been on, many places talking about market structure these days. And it's something that he focused on as well, which is, it's vital that the MBBO properly represents the market. But for these high price names, we don't think that's true. And the second part of this that I think is really important is a bit of a broader market structure concern. And so as I mentioned, the quotes are wider in these names, but we do know that there's more trading within the spread. And so you might kind of think that this doesn't have a meaningful impact on the prices at which trades actually occur. But if you look at the data and we have, I think that assumption is wrong, right? And so in fact, we see quoted and effective spreads in these names that are much worse than stocks that are not subject to lot constraints. And ultimately, we think that this costs investors money in terms of increased transaction costs. And that's a problem that I think we're really interested in solving for the industry.
Does the infrastructure rule, the amended definition of a round lot, I mean, do the changes address the problem that you're describing and seeing, or is something else needed, or should there be like a belt and suspenders type of an approach here where it takes, two acts to kind of achieve to correct the problem that you're seeing?
Yeah, so obviously we're here to talk about the infrastructure rule today, and
Right.
the infrastructure rule does include a solution to this problem, which is to tier round lot sizes based on the price of the security. And I think we at MEMX have been great supporters of all of the changes in the infrastructure rule, and including this one. And so once that rule is implemented, we'll see much lower requirements in terms of notional to set the MBBO in high price names. But we wouldn't be here to talk about round lot reform if that was the end of the story. So the real issue that we've got right now, I think, is an issue of timing. So we've got the right solution, but basically in a holding pattern until the new rules kick in. And unfortunately, round lot reform happens to be at the very end of the implementation timeline for the infrastructure rule. And what that means is it comes after competing consolidators are fully operational and the exclusive SIPs have been decommissioned. And it's gonna take some time for that to happen. I mean, the first step of implementing the infrastructure rule is that the exchanges on the SIP operating committee are gonna have to file a plan amendment that addresses, among other things, fees under this new structure. That's got to go through a commission approval process. We've got registration and testing of competing consolidators, a period of parallel operation where these competing consolidators will be operating and disseminating data at the same time as the exclusive SIPs. And then after all of that, the OpCo actually has to file yet another plan amendment to decommission the exclusive SIPs. So this is it's a mammoth undertaking. It's going to take a huge amount of time. We've kind of mapped this out, and even if you take some fairly conservative assumptions about how long different things take, like how long the SEC acts on a plan amendment like this and things like that, we're looking at, say, late 2024 at the earliest, even with no delay. And I think with something as significant as this, we're really it's expecting no delay is not a very good assumption, right? So we've got the potential for delay just due to the complexity of this project overall. We've got the potential for delay due to external factors. There are litigations that's currently going underway in the DC circuit on these topics. So if you try to be a bit more realistic, I think we're probably looking at 2025 or beyond before round lot reform is really going to take effect. And I think that's too long for something that I think both the SEC and the industry agrees on, and where we already have a solution that's ready to go. Like we have a solution. All we need to do is implement it. But we're not there yet, and we don't think we should be waiting 3, 4, maybe more years for these changes to be made.
So I mean, you talked about, even if all the timelines were hit, and we had a very optimistic view that this could be worked through all the details and implemented, to your point, it's still going to take a year plus, 2 years plus to get this done. Now, you've obviously done a lot of research in this area. You've provided some data on the savings that investors could realize if the round lot reform were instituted sooner than later. I mean, could you just tell us, give us some numbers, give us some numbers on what you think a 1 year, 2 year delay on this, what we're talking about?
Yeah, so we're, the numbers are very substantial. So we just put out a paper on this topic, which I think hopefully you shared with folks. And the numbers here are what's really driving our desire to get this done early. And so just a little bit on the approach that we took for our analysis. We wanted to see what it would look like if we made these reforms sooner rather than later. And we wanted to get a sense, I mentioned earlier, effective spreads are much wider in these high price securities. And so, we we took a look at both quoted and effective spreads in lot constrained names, and then we compared them with spreads in securities that were similar both in terms of liquidity, like notional value traded on a daily basis, and then also we tried to pair securities in these lot constrained groups based on how much notional would be required to set the MBBO under the infrastructure rule. And then, for securities trading under 250, we took a look at, how much notional is required to set the MBBO under the current requirements. And, so by comparing these two groups, you can get it's a rough estimate of how much spreads are impacted by lot constraints. It's by no means, like this is the number that it's going to be in the future. Like, we don't have a crystal ball here, but I think it gives us a good way to kind of, scope out the general size of this problem, and the results were very interesting. So I don't think it's going to surprise anyone who's thought about this issue to say that quoted spreads were wider across the board for the lot constrained groups. I think that's pretty common knowledge. But what I think is most interesting is that was the case for effective spreads as well. And I should mention, when we looked at this issue, it's not all in the paper, but we found that the results were pretty consistent across the board. So like I said, we're talking about every group that we looked at. We also cut data on a daily basis and so forth, and we found really consistent results of wider quoted and effective spreads. And there are a few different ways that you can kind of see how this works. The MBBO is a pretty important reference price for trading, whether you're talking about trade through protection or you're talking about trades that are explicitly priced off of the MBBO. And so put some numbers out there. On average, we saw effective spreads were about 42% higher in the lot constrained buckets, which means it's really quite a lot more expensive to trade in those names. And looking at what that means across all of those names, we estimate there could be somewhere in the region of $10 million a day in additional transaction costs. So basically, spread costs that are attributable to these lot constraints. And then if you extrapolate that out to call it 3 years of waiting for the infrastructure rule to actually for the round lot reform and the infrastructure rule to be implemented, you're looking at somewhere in the region of 7.5 billion in transaction costs that could be saved if we're successful and we can get round lot reform implemented now instead of waiting for it.
So what logistically has to happen for this to move forward? I mean, obviously, you touched on a couple of themes here, right? One is that there is a good amount of support, among the industry to do this, and this isn't the first time that we've seen industry support something, but obviously affecting change is always where the challenges come into. So can you just kind of give us a sense of what logistically has to happen for round lot reform to move forward away from the infrastructure rule?
Yeah, no, the logistics here I think are important, and the good news actually is the listing exchanges already have the authority to change the round lot size for their listed securities. So I mentioned earlier there are 12 NYSE listed names that actually trade with non-standard round lot sizes today, and really it's up to the listing exchanges if they wanted to add to that list. So we're talking about systematically modifying round lots in about, like I said, 200 names. So with something like that, you might expect that the SEC would want to see that submitted to them in the form of a proposed rule change. And obviously I can't talk for the staff in terms of how they would approach that filing, but my impression based on conversations that I've had is that they'd be supportive of what are effectively efforts to expedite the commission's own rulemaking, assuming that was something that we could do with consensus from the industry, from the exchanges. So at a high level, I think it's something that would be readily achievable, but the devil as always is in in the details. And I think the details here are really about, what our plan for implementation is. So, I think here it's worth talking about, implementation costs, because, that was really what drove the SEC to put round lot reform at the end of the infrastructure rule implementation timeline. So, the SEC wanted to avoid a situation where the exclusive processors, which, are, their ultimate plan is that the exclusive processors would be decommissioned in favor of competing consolidators. And they wanted to avoid a situation where the exclusive processors had to do a significant amount of technology work to, implement these new requirements when, at the end of the day, they were going to go away. And, that's a fair concern. That's a very reasonable concern to have. But, we think that there's a way to do this that would actually, minimize those implementation costs for the current SIPs. And so to kind of understand that, you have to know there are two sets of requirements that the SEC put in the infrastructure rule to support their round lot changes. The first is a requirement that the SIPs disseminate an indicator that tells market participants what the round lot size is for different securities. And here, it's worth pointing out that the UTP SIP actually already has a round lot size message that they put out at the beginning of each trading day. That says what the applicable round lot size is. I found out recently that CTA SIP does not have a similar message, which is sort of interesting because all of the names that have non-standard round lot sizes are actually currently CTA names. So that's a sort of weird byproduct of how things have developed from a technology perspective over the years. But realistically, adding something similar to CTA, you're talking about a message that goes out at the beginning of the day, and that's it. That should be relatively simple for them to implement. And then the second requirement in the infrastructure rule is that the SIPs disseminate size information in terms of actual shares instead of the number of round lots, which is the current convention. So that's a good change. We support the dissemination of actual shares. We think it would be very helpful, particularly for retail investors in a world where the round lot size is not a standard 100 shares across the board. But importantly, I think this change could happen later, under the timeline that the SEC set forth in the infrastructure rule. And that would allow us to, avoid implementing these changes on the current exclusive processors. And, in the meantime, translating the number of round lots into the number of shares is, it's multiplication. We do recognize that there is some work that the industry would have to do in order to make use of that. And so obviously, I think we would want to give an appropriate amount of time for the industry to implement, doing that multiplication. But, ultimately, I think that is something that, is doable in the short term. And do a tiered approach like this, I think lets us, address the SEC's concerns about implementation costs, get this off the ground quickly, but also ensure that investors can reap the cost savings that we expect to occur from round lot reform.
So I mean, you mentioned, or at least I mentioned in the opening remarks that there's been a fair amount of discussion in the public domain on this topic. What have been your experiences with speaking with the market participants? I mean, more specifically, I mean, is there a forum where these conversations are very organized and perhaps even a to-do list is being put together?
Yeah, so that's a good question. You may be aware that the SIP operating committee put together an odd lot task force a couple of years ago to address odd lot transparency, before the SEC actually initiated its infrastructure rulemaking. And so that task force has actually been, started again to talk about these issues. So, we do have a discussion that's ongoing in that forum and hoping to make, some progress there. But, thinking about this just a little bit more broadly, I mean, I think it's really important that we do have a good forum for, changes for the industry to come together and talk about, market structure issues, whether that's, ground lot reform or something else. So, you know, I think that's something that we've been thinking about. You know, it's definitely a problem, and you know, there may be a couple different formats of how these discussions could take place. You know, but we're thinking about how best to situate this. For now, I think, you know, we will continue to have these conversations in the SIP operating committee. But you know, I part of the reason that I'm here today is because, you know, we want a MEMX, we want to, you know, engage the industry on, you know, issues that we think are very important from a market structure perspective. And I think, you know, thinking about an appropriate venue where we could all, you know, collaborate on these issues is something that, looking forward, you know, we're pretty interested in.
I mean, we would definitely be supportive of that. I mean, you know, not to change topics here, but we did, you know, put out a comment letter on CAT, and that was one of the comments that we made in this. So, like, you know, we can respect the fact that these NMS plans, that there's a lot, that there is situations where there's proprietary information that should stay within the exchanges, and that the broker dealer community should not be seeing. But it doesn't mean that it's there should be no interaction between you know, parties who are affected to the degree that that some of these changes have. So so we obviously would be very encouraging of that. So I'm going to try. It's 4:58, and I'm going to just try to wrap it up here, because I like to keep these you know, on the schedule for, you know, the end of 5 o'clock. I mean, I just would just add one last point, and we'll call it a night. I mean, I think everybody understands that, you know, the governance order, the infrastructure rule, and the fee change rule, you know, are by definition controversial and complex, and, you know, therefore it's going to take considerable time for them to play themselves out. But you know the MBBO, I mean, you know, when it was originally implemented, you know, it really did provide investors with enormous benefits and protections. And to some of the points that you kind of made before, I mean, it really is under, you know, our MBBO today is under attack from like multiple fronts, and for good reasons. So, I mean, I know that's why I hope that the industry can come together on this and restore some of its lost credibility that it's had, you know, over the you know, the past couple of years here. So, Adrian, I'm going to give you the last word. Otherwise, you have any last comments here, and we can wrap it up and wish everybody a happy summer.
No, I think we're great. So happy summer, everyone.
All right, happy summer, everyone. Listen, our next open call, we'll probably do one more in late August. Again, just keeping a lookout for the announcements coming on the conference. I want to thank Adrian again for coming on tonight and talking about this topic. If you have any interest in it, have any opinions on it, please reach out to us directly. We'll be more than happy to engage on this one. And with that, I wish everybody a good evening, and thank you again for dialing in. Good night.
Good night.